As we close out the Friday financial earnings frenzy, we take a look at JP Morgan Chase, who beat earnings by 24 cents at $1.82. They also beat revenues coming in at 25 billion and some, beating the estimates by 1.1 billion. Now, they were up in consumer banking, they were up in business banking, they were up in net interest from loans, non-interest from loans. They were up in almost every category you'd want them to be up in, except for a couple. But they were up by a lot in a few of the good ones. But a couple of these make me a little trepidatious. See, they've got a bit of a problem with their mortgage sector. Now, I'm not entirely sure if the mortgage sector of the bank is maybe deciding to pull back a little bit on investing in some mortgages, maybe thinking that people are a little overreaching. I'm not entirely sure that might not be the plan, but down negative 26% is a big fall off. That's a lot of business loss. So is it a protective measure? Are they hedging their bets in case something bad happens? That very well could be true, but I can't say that for sure. Also, their trading desk is down. They are not moving out near the amount of money through the investment side as they want to be. And that money's down. And there's no real excuse for that, because when you're thinking investments, one of the major banks, one of the major financial institutions you're going to think of is going to be JP Morgan Chase. What's the reason there? There must be some sort of reason to be down. I think it was 13%. That's pretty severe. Now, the other thing that's really holding them down is the net income. They're down 6%. I mean, and they attributed the same thing that Citibank attributed it to earlier, the same thing that Wells Fargo attributed it to. It's just operating costs are high. It's apparently quite expensive, as opposed to last year, to be running the exact same operation. So while I'm sure going forward they're going to be making the type of adjustments that they need to, as of right now, it weighed down the balance sheet a little bit. Not enough that they didn't beat on earnings by a bunch and beat on revenues by a whole bunch. Sure, they've got stuff to work on. They're a major institution with 100 different little chains that trickle down of different departments and all sorts of things. So are they going to be up double digits on everything every time they report quarterly earnings? I think that's ridiculous to assume. I think you should go and read the actual earnings transcript and get a better idea of what they're doing in comparison to other banks, and then make your financial decisions based off good, solid research. Now, during the conference call, Jamie Dimon had a few things to say himself. I'm not going to repeat a couple of the words he said, but he basically got down to the brass tacks that the federal government and the bureaucracy that's holding back business in the United States is what's keeping them from growing at the exorbitant rate they believe they could grow at. They say they've been doing 1.5% to 2% a year, and that's fine since the Great Depression of 2008. But they say they could be doing a lot better. But they get stifled almost at every pass by things Congress. There's always some problem with someone who's not running business, but they want to tell you how to run business. That's kind of a common theme, and it seemed today during that conference call, despite the fact that the earnings and the revenues were good, and a lot of the statistics they reported in a lot of their departments were very good, Jamie Dimon was not happy about this specifically, and he aired that news out. It's pretty out there. He said what he thought, and he knows better than a lot of people do how much stuff might not be going on because of politics. Politics in the way of business a lot of the time is not my idea of good governing. And I think I would probably agree on that, even though I don't necessarily know exactly the points he was making in regards to what, because he was being very vague, but you could tell the frustration level definitely boiled over. You do not hear conference calls like this out of CEOs from companies that are this, I mean, the market capitalization of JP Morgan Chase is off the charts. This is one of the major companies around the entire world. To hear this lets me know that this is on his mind, and that JP Morgan Chase is probably doing as much as they can, including the other banks maybe if they feel the same way, to lobby against whatever's slowing down the policies that they're trying to put through that they think would better the financial system in the United States.